Today, I want to talk about Roaring Kitty's new $200 million GameStop buy and position update. This actually makes him one of the largest GameStop shareholders, and I want to explain how he could trigger a gamma squeeze all on his own. So stay tuned and let's make some money. And now I'll dive straight in with the key information. So, Roaring Kitty posted on Reddit yesterday and a few hours ago his new GameStop position update. So as of Sunday evening, Roaring Kitty held 5 million GameStop shares with an average price paid of $21 per share. He also held 120,000 $20 call options expiring June 21st, where he paid an average price of $5.67 per contract. That puts his total account value at $210 million, with around $30 million worth of cash, so a total GameStop position of about $180 million split between shares and calls. And as of Monday evening, he provided an update on that position showing he's still holding the same 5 million shares and the same 120,000 call options now, with a total account value increasing from $210 million to $289 million. Again, posting a one-day gain of around $79 million as well. Now you can see this actually makes Roaring Kitty the 5th largest shareholder of GameStop. Obviously, by holding 5 million shares, he outranks Geode Capital Management and is just slightly below State Street Corporation. Now, due to the recent dilution, this actually puts him slightly below the 5% shareholder threshold, aka meaning he owns slightly less than 5% of the entire float, meaning he doesn't have to file any SEC disclosure forms. But what this also does mean is that Roaring Kitty is holding 120,000 call options, which he could potentially exercise for over 1 million GameStop shares. Now, obviously, depending on the price at the time of exercise, Roaring Kitty could need anywhere between $20, $30 and $40 million to exercise all of those calls. Therefore, meaning with $29 million of cash in his account, he can exercise at least a very large portion of the calls. Which therefore means these market makers and these hedge funds actually have to hedge for his potential exercise by going into the market and purchasing around 1 million GameStop shares, obviously pushing the price up further. Now, what's also incredible about this, as tweeted from Heaven Sent, he said Roaring Kitty could have sold his calls at the market open for well over $200 million of profit, but he didn't. And he said if that doesn't let you know what he thinks is about to happen, I don't know what will. What Heaven Sent is basically saying that Roaring Kitty did not sell these 5 million shares and 120,000 call options when the price of GameStop was at $40 per share, if not at times slightly above during the pre-market, because Roaring Kitty thinks the price is going higher. Roaring Kitty had the opportunity to sell out and take home around $500 million, but he's still holding the shares. You may have also seen that Andrew Left, the founder of Citadel Research, has also just placed another new bet against GameStop today, the 3rd of June. Unusual Wells tweeted saying in May, Andrew Left also announced a short position in the company's shares, but he said, "I've covered my short from May and then re-shorted today." So it seems we have the battle of two titans, Andrew Left from Citadel Research, who thinks the stock price is going down, and Roaring Kitty, who thinks the stock price is going up and is willing to put $200 million on that bet. I think the fact Roaring Kitty didn't sell today really tells me that Roaring Kitty thinks the price of GameStop is going much, much higher. Maybe to the point where he thinks he can take out at least $1 billion during the squeeze. I also wanted to go through one of the trades we took on Friday in the Millionaire Mindset Trading Group, where Ty before locked in over 400% gains, and the total play ran over 1000%. So typically in the group, we trade small, fast-moving momentum news plays, small cap stocks, but we also trade options as well. Now on Friday, I posted to the group saying that I'm buying the following for a lotto play, which was an S&P 500 or an SPX straddle play. So with a straddle play, you're effectively purchasing a call option and a put option, hoping the price of the S&P 500 moves drastically in either direction in a fairly short space of time. Now on Friday, the S&P 500 finally broke above that 200-day moving average and also broke out of its resistance during the morning, where we purchased this lotto straddle play, and obviously towards close, the S&P 500 ran drastically. As I said, Ty locked in a 400% gain on this one options play, and the total play ran for over 1,000%. So guys, if you want these kind of gains every single day, be sure to join the Millionaire Mindset Trading Group using the link in the description below. And what maybe even supports this is the fact these market makers and trading platforms are so scared of Roaring Kitty that E-Trade is considering banning Roaring Kitty from their trading platform. The Cabesi letter tweeted saying the company, which is owned by Morgan Stanley, is reportedly concerned about market manipulation around his GameStop trades. Now this tells me two things. It tells me that E-Trade is trash. It tells me that E-Trade is not for retail investors because they're considering kicking a retail investor off of their platform for making too much money. But it also tells me that E-Trade either doesn't have enough money to buy the shares and hedge for his position, or can't buy the shares without pushing the price up too much. Clearly there's something going on at E-Trade that has them so panicked that they can't hedge for this position and need to try and kick him off the platform. Now Simulation Ape Nation has also posted this screenshot of the FTDs once again spiking for AMC. So we can see in the first few weeks of May, we've had yet another day where the FTDs have skyrocketed up to 6.5 million failed to deliver shares. Now what's actually maybe most interesting here is the fact this skyrocketing FTD number actually happened way before the price of AMC rocketed upwards. So this massive number of FTDs, this 6.7 million FTDs, hit here on the 7th of May 2024. But we can see the price of AMC didn't really start moving until Monday, the 13th of May. So it will be very, very interesting to see how many FTDs we start seeing in this second half of May when the FTDs start flooding in. And it'll also be interesting to see what actually caused this giant influx of FTDs before the price of AMC started moving. And again, on Friday, Dave Murphy tweeted this screenshot of a new record showing the largest ever imbalance he's seen on AMC. Here we can see a 1.2 million share order imbalance on the buy side for AMC. This means there was 1.2 million more shares worth of buy orders than there was sell orders in a single day. And that's why Hedgie McWedgie has tweeted saying, I think that Robinhood and Apex Clearing are about to have another 2021 style meltdown, and saying this time there will be no stopping it. You may have seen recently that both Webull and Robinhood have massively tried to increase their marketing efforts to attract new customers. Clearly, they need more cash on their platform to meet those margin and regulatory requirements. Clearly, they're expecting some massive cash calls from those regulators, similar to what happened in 2021, and they're trying to get as much cash as possible. Otherwise, both Robinhood and Apex Clearing will be about to have or about to experience another meltdown. Now, you may have also seen this new RICO lawsuit against the brokerage firm TradeStation. Now, you may remember a few months ago, TradeStation openly admitted they did not hold the number of MMAT shares or MMTLP shares that the DTCC had suggested they were holding. So it says here, TradeStation admitted to its customers that it failed in its duty as a securities intermediary to maintain a proper aggregate quantity of physical NextBridge share certificates that correspond to the aggregate amount of Next shares held for the benefit of its customers. And as a result, this lawsuit has been filed against them and summons has been officially served. I'm going to keep tabs on this lawsuit, as it will be very interesting to see where this lawsuit goes from here and whether other hedge funds, market makers or trading platforms get brought into the lawsuit under the RICO Act.